Hey there, welcome to XTRM Finance, the channel where we tackle financial plans with a splash of humor and a whole lot of facts. Today we're diving into the bucket strategy for retirement. It sounds simple, just fill up 3 buckets of money and you're good to go, right? Wrong. These buckets can spring leaks faster than a cheap kiddie pool. Stick around because we're uncovering the challenges of the bucket strategy, how to deal with them, and whether this method is your golden ticket to a stress-free retirement. Don't forget to hit that like button, subscribe, and share this video with your fellow retirees-to-be. Let's dive in. First, a quick rundown for the uninitiated. The bucket strategy divides your retirement savings into 3 categories. 1. Bucket 1, short-term needs, cash or low-risk assets to cover immediate expenses, usually for the next 1 to 3 years. 2. Bucket 2, midterm growth, investments for 3 to 10 years down the line, like bonds or balanced funds. 3. Bucket 3, long-term growth, stocks or other high-growth assets meant to last 10+ years. Sounds neat, right? But like every strategy, it comes with its own set of challenges. The first issue with the bucket strategy is timing. How much money goes into each bucket? How long should each bucket last? If you get this wrong, it's like pouring a gallon of water into a thimble. It's going to spill everywhere. Here's a common mistake. People underestimate how long they'll live. With medical advancements, retirement can last 20, 30, or even 40 years. Run out of water in bucket 1 too soon, and you might be dipping into your long-term bucket too early. Let's talk about everyone's least favorite party guest, inflation. It's like a sneaky driller poking tiny holes in your buckets when you're not looking. Think about it. The $50 you set aside for groceries today might only buy you a loaf of bread and some peanut butter in 20 years. This is why relying too heavily on bucket 1 can backfire. To combat this, you'll need to keep a portion of your funds in growth-oriented investments, even during retirement. Here's a challenge that most people overlook: sequence of returns risk. This happens when you withdraw money during a market downturn early in retirement. Imagine pulling cash out of bucket 3 just as the stock market takes a dive. This can drain your retirement savings faster than a teenager drains a Wi-Fi plan. The key is to avoid selling investments at a loss by having enough in your short-term bucket to weather the storm. Retirement planning isn't just about numbers, it's emotional. Watching your long-term bucket shrink during a market downturn can feel like watching your favorite team lose the championship. That's why sticking to the plan is crucial. Resist the urge to panic sell. Remember, your growth bucket is designed for the long haul. Now let's talk about maintenance. The bucket strategy isn't a set it and forget it plan. You'll need to rebalance and refill your buckets regularly. For example, after a good year in the market, you might need to move funds from your long-term bucket to your short-term one. It's like tending a garden. You've got to water the plants, pull the weeds, and sometimes shoo away the squirrels. So is the bucket strategy a good idea? It depends. If you're someone who likes a clear visual plan and doesn't mind a little upkeep, it can work well. But if you're the type who prefers simplicity, a balanced portfolio might be a better fit. The important thing is to customize the strategy to fit your goals, risk tolerance, and lifestyle. To wrap up, here are some solutions to the challenges we've discussed. 1. Plan for longevity. Assume you'll live to 100 and allocate funds accordingly. 2. Combat inflation. Keep some growth investments in your portfolio. 3. Protect against market downturns. Build a robust short-term bucket to avoid selling investments at a loss. 4. Stay flexible. Reevaluate and rebalance your buckets annually. All right, folks, that's the scoop, or should I say, the bucket, on the challenges of the bucket strategy for retirement. What do you think? Is this strategy for you, or do you have your own secret sauce for retirement planning? Drop your thoughts in the comments below. Hit that like button if you learned something new, and don't forget to subscribe for more tips, tricks, and a dash of humor to help you crush your financial goals. Share this video with anyone who's planning for retirement, and let's keep the conversation going. Until next time, this is XTRM Finance signing off. Stay savvy, stay secure, and keep those buckets full.